Morning, guys. Monday morning action going on. I just want to get right into it. But before we do, if you're new to the channel, this is a channel about making money. It's about stock market technical analysis. We call out levels. I call out trade ideas all the time. Many of them are making a lot of money right now. They don't all work out, but many of them do, and it's really about playing the playing the probabilities. So that's what this channel is about. If you're interested in being entertained or high production quality or anything like that, go listen to Meet Kevin or something like that. But if you're interested in actually making money in the stock market, then that's what this channel is about. And so we'll go ahead and get right into it. Give me a thumbs up. Subscribe if you're new. If you're interested in following along, I hope I'm adding value to everyone, and I just appreciate that thumbs up to help add value to my channel. So again, let's get right into it. All right, I'm seeing a lot going on. Let's look at the NASDAQ futures. Here's the breakdown candle that we got. This was when futures opened Sunday night, broke down, and looks like we're just doing a back test right now of this minor trend line right here. It's not a major trend line, but we're just kind of we back tested it right here. We should start to roll over. That's what that tells me that's going to do. So I expect the markets to sell off. Let's look at the Qs. Qs, red line right up here, is the bull market trend line for the last 10 years. We broke down. We just did a back test. Back tested there. Back tested there. We could back test again. We could even overshoot it a little bit and have a kind of a false breakout. That's a possibility as well. But again, we're in the area where I think risk reward, it makes sense to short, and I'm short, and that's what I'm looking for. So I'm looking for the markets to go lower. Even if they want to do a false breakout and break higher before they go lower, I still think that they go lower. So maybe we could see something this week where they gap higher, gap up above, and then that just fails. And that's the end of this bear market rally. So that's what I'm looking for. Regardless, it's in the area. I think we go lower. And how low? Well, I think we're going to break the lows here. I really do. Again, I'm just speculating. The charts tell me that we're going to go lower from here. The charts don't tell me that we're going to go break the lows. But if I look at the daily, then, this to me, going back to the decade-long bull market, looks like we broke the trend right here. We're doing a bear market rally back test, and we're starting to fail. You can see it right here. So I could also easily see a big gap down tomorrow, or selling to intensify today, but maybe a big gap down tomorrow and then a big sell-off. It could go that way as well. So these charts tell me that we had a bear market rally, and now we're going to head down. We're going to head down to this 143 is the next target on triple Qs, and then we got some longer term targets down below. So what else do we see? Look at Microsoft. This is interesting. Look what it's been doing the last few days. We just kind of ran up. Here's a little pop. They faded that, and then it's just been sitting in this plateau, and we're starting to creep down. So we'll see if this intensifies. Look for bigger candles, and that would tell me that that's the end of this bear market rally in Microsoft. What else is interesting? Amazon I don't know what's going on with Amazon today, but for some reason it's just we're having a pretty strong up day. Up 4%. So that's holding the Qs up a little bit because the Amazon is in the triple Qs. I don't know. Amazon's close to breaking its all-time highs right up here, which is pretty crazy to me, but I guess the market is anticipating everyone's going to be buying stuff from home and not, Amazon's going to get more business, which maybe that's true. I could see that. But at the same time, you've got a lot of job losses, and people are just not going to be spending as much, and that's just the reality of recession. So Amazon will be affected negatively from the loss of spending. But anyways, today it's moving higher. I didn't see any news on it, but that's just something to keep an eye out. Here's XOM. Look at this one. So here's your bearish rising wedge. I pointed that out on the Saturday video. Go back and look at that. Look, we're breaking down, not impulsively, but starting to break down. However, we don't have an hourly close below. That'll settle up in here in like 10 minutes. And so, if we get an hourly close, then that is a breakdown. It's not impulsive. There's not a lot of volume. So maybe we do a back test and then roll over. But a breakdown is a breakdown. So, and I like the fact that this thing just previously broke to the upside of this bearish rising wedge. That was the fake out move. So that traps some people. And then we break down, and we're starting to break down. So I think this heads lower. I am actually interested in buying this thing to go long XOM. I just want it lower. I want the prices lower. So maybe we break down and undercut the lows down around $30, and then we'll look at maybe that's the area to get long. Until then, I think we're going lower. Walmart. Yeah, Walmart is just back testing again. I added to the position this morning, right up here at the resistance, and I'll just continue to, hold this, and I expect this to break down, but it could pop. You never know. And if you see where I get the chart, here you go, bearish rising wedge on the daily chart. Good support, good clean support, good clean resistance right here. And as we roll up, we're just kind of tagging that. We've already overshot it once right here today, actually several times. So I think we fail. Probably come with a gap down, or maybe the earnings comes out and it's horrible earnings, and maybe that sets it in play to move lower. Until then, it still is a good short. As long as we're holding within this range, we're below resistance. Resistance is still overhead, so nothing has changed there. Look at Costco. Costco's, here's your downward trend line on the hourly chart, and basically held this resistance so far, so moving lower. I think Walmart and Costco are kind of the same trade. I think they both head lower. And that's how I'm playing it. I'm playing Walmart specifically. MGM, I called this one out on the video on Saturday, down 6% today. You can see, here's your resistance. And if I roll out to the daily, you can see how I marked it out. Nice, clean, easy resistance. Okay. Again, I use logarithmic scaling. So I think that's important for proper charting. And so this is everything that I look at is logarithmic. Tweak your charts to be logarithmic. I think you'll find better results when charting. And so anyways, you've got resistance here, then it was support, and then we're below it. We came right into it, didn't quite get there, and it's starting to head south. So looks to me like a bear market rally. This one, I think we're going to go down. I think we're heading south on this one, continuing. And so far today, that's what it's doing. All right, bonds, these are important to watch. The bond market's really one of the most important markets to give you a bigger picture of what's happening in the market. Bonds, the treasury market's 10 times larger than the stock market, and that's really important to understand what's happening with the treasuries and the rates and all that. Bonds are, they're just kind of hanging in there. They've been propped up by the Federal Reserve. That's what all this buying is. This was the market selling, and then the Fed came out with trillions of dollars, and they've been buying bonds. So this is the Fed doing all that buying. And here's corporate bonds. I said that these probably look like a short, and sure enough, selling off today. So I think we're going to head lower here in this LQD. Probably going to gap fill 125.99. Well, basically 126. And I think we had lower past that. We'll gap fill, maybe we chop around a little bit, and then we break to the downside. And ultimately, I think we're heading back down to the lows and probably lower. These trade a lot like the stock market, LQD. So these are investment grade corporate bonds. They're just if you've done any kind of analysis, there's a bunch of these that are rated BBB. That are going to get downgraded most likely, causing the hedge funds to have to sell this LQD because they can't hold stuff when it becomes junk bonds. So the BBBs that are investment grade now, when they get downgraded, they'll have to be sold, and that selling will affect LQD because they're indiced in here. So I think there's going to be forced selling on this thing. I think it's heading south. This was your kickback rally, and this was the Fed. You know, again, this is the Fed. They're in there buying corporate bonds as well. So just the Fed buying. And again, if you believe the Fed can hold everything up, then this should make all-time new highs and continue to run. I believe the market and the charts tell me otherwise, and the market's a lot larger. The entire world trades the U.S. market. It's a huge market, and you know, yeah, the Fed has they have the power to prop everything up, but they'd have to do so much more money printing than what they're doing. It would be exponentially higher if they're going to completely prop the market up. And so we just watch for that. You know, if the money printing and the Fed balance sheet just starts to get really out of hand, then yeah, they could prop it up. But doesn't mean they're going to be able to push it to new highs. They might be able to just balance out the selling that's coming in. So risk reward, I think it still makes sense to short these. I don't think there's a lot of upside here, and it looks like there's more downside. All right, and speaking about the Fed printing a bunch of money, that's why we track gold, and that's been my thesis for over a year, you know, a year and a half, 2 years almost. I've said, look, the Fed's boxed into a corner. They're going to either have to let everything deflate, or they're going to have to do a bunch of money printing and causing gold to go higher, and the dollar should go down. And that's what we're seeing in the miners. The miners are playing out. Here's Barrick Gold rocketing higher, up another 6% after being up 10% on Thursday. Markets were closed Friday, so that's a 15-16% gain in 2 days. Not bad. And where are we looking at? Well, I'm looking at taking some profit up here around 27. If I can roll out right up here. So we've got a 27, 28, somewhere right in there. I think we rocket right up into that. That could even happen today, or today or tomorrow, sometime this week. We could just the momentum could carry us right into this, and then should run into resistance. I'll look to probably take a little bit of profit and wait for this thing to cool down a little bit before adding back. But we're catching the momentum right now, rocketing higher. This is my largest position, and it's I'm doing pretty good on it. So gold is doing well. Here's your gold bullion, and we're getting a nice spike, kind of a breakout move today. Gold's in a bull market. Gold continues to move higher. Trade it accordingly. Buy at support, and that's how you play a bull market. And that's really all I got for the video, guys. I'm going to just go ahead and get this one out here. And that kind of gives everyone an update on where I think markets are heading in the near term. And so if I see any stocks or anything that looks interesting, I'll add those in the next video. Again, give me a thumbs up. Appreciate it. Talk to you guys later. Bye.